Very good morning, everyone. Hope you all must be doing great. Let's start with the next question of total income. So yesterday, I have given question number 5 as an homework, and I got message from some of the students. They're finding difficulty to solve it. So first of all, let's discuss this question number 5, which we have. I've given you as a homework. So if you look at it, it says Shivansh is a resident and ordinary resident, age 61 years. This person is a senior citizen engaged in the business of manufacturing of motor parts. So he is engaged in the business of manufacturing of motor parts. He is subject to tax audit under 44AB. He has provided with the following information. Now, why they have given this information that he is subject to tax audit? So it might be that they are saying that if any TDS is required to be deducted, then he is a big individual. He should deduct TDS, right? Now, I always tell you that, first of all, just see that what is asked from us. So they are asking, compute the total income. So first we need to compute our total income and then the tax liability of Shivansh. So we need to compute the total income and tax liability. How? Assuming that he has not opted for the provision of 115 BAC. So he is not opting for 115 BAC, that is optional regime. Ignore provisions relating to AMT. AMT we will discuss either tomorrow or day after tomorrow. So here they are saying, anyways, ignore AMT provisions. So we need to compute his total income today. Okay, so his profit and loss account is given to us. Let us read his profit and loss account. It says, admin expenses, salary and wages, interest on loan. As of now, admin expenses, salaries, interest on loan, these are normal business expenses. Depreciation, okay. If nothing is mentioned regarding depreciation, we are perfectly okay with it. Professional fees, rent, rates and taxes, traveling conveyance. So as of now, my mostly all the expenses prima facie seems to be okay. Correct. And on the credit side, gross profit, it's a normal PGBB income, gross profit. So we are okay with it. Profit on sale of asset of scientific research. Okay. Profit on sale of asset of scientific research, 2 lakh. Let us see whether it is PGBP or something else. And winning from lottery, net of TDS, 30%. So this is after TDS. Obviously, it is not PGBP. I'll delete 31,500 from PGBP and I will take it to my IFOS. But while taking in IFOS, I'll take the gross amount. So this is after 30% TDS, 70%. So you can easily calculate the gross amount that we will take it in IFOS. I believe no issue still here. Okay, let me discuss with you the sale of scientific research asset. Everybody please write with me. At any time my screen gets blurred, please do let me know. Sale of scientific research asset. See, whenever you purchase your scientific research asset, you claim deduction. Deduction 100% under section 35. Whenever you purchase your SR asset, please keep on writing with me, you claim 100% deduction. So what does it mean? Example, it's very easy. If you purchase an asset, the purchase cost of an asset is, let's say 10 lakh, then you claim 100% deduction, 10 lakh. And the value of this asset comes down to 0, nil. Why? Because you have debited entirely from your P&L account. So the value comes to 0. In that case, if you look at it, the original cost of this asset was 10 lakh, but its value today is nil. So today its value is nil. So whenever you will sell it, obviously you will sell it at above zero price. So whenever you will sell it, there is a profit. Let's say if you sell it for 1 lakh, so there would be a profit of 1 lakh. You sell it for 2 lakh, there would be a profit of 2 lakh. So if you sell it 1 lakh, 2 lakh, 5 lakh, 6 lakh, 8 lakh, 10 lakh, up till this amount, you all know that this is your PGBP income. So if you are selling it up till 10 lakh, so this is PGBP income under section 41, right? Even if you don't remember the section number, that is perfectly fine. And over and above it, it's a capital gain. So if you sell it for 12 lakh, so 12 minus 10, 2 lakh would be your capital gain. Then it also depends, because you know that in capital gain, indexation is also there pre-budget. Post-budget, there is no indexation. See, if you are selling it post-budget, so simply 12 minus 10 you can do. 2 lakh is a capital gain without indexation. And if it is a short-term asset, if it's a short-term sale, you are selling it within 1 year, 1.5 years, or 2 years, not more than 2 years, then again it is short-term. In short-term, we don't do indexation. So if you're selling it for 12 minus 10, 2 lakh would be your gain. But in case it's long-term and it's pre-budget, so you understand, for pre-budget long-term, we have indexation also. So what you will do, 12 lakh minus, not 10 lakh, indexation of 10 lakh. Everybody agree with this? Indexation of 10 lakh you will do. So if you're selling it, so anything over and above is a capital gain, and capital gain should be computed accordingly. Short-term, long-term accordingly, pre-budget, post-budget accordingly. Everybody is quite okay with it. Have you done this? Very good. So here we have profit on sale of asset. So right now we need to identify, we'll be identifying it. This 2 lakh profit, it is this profit, or if it is this profit. See, if this is this profit PGVP, then we are okay with it. Then there is no issue, because it is correctly credited in that case. But if it is this profit, then I believe that it is not okay with it. So we will see as per the information. Correct? No issues. Now, the information. Opening stock and closing stock of the finished goods were undervalued by 10%. So we understand how we will be dealing with this. Opening stock or closing stock is undervalued. So although they have not given the opening stock or closing stock over here, because they have directly started with the P&L account, they have not given me, see, gross profit they have started with. They have not given me the trading account. Anyways, doesn't matter. But they have given me the value of the opening and closing stock. So we will adjust accordingly. So we will going to adjust accordingly. Okay. Now, second point says, salaries and wages include, see, mind these words, salaries and wages includes A and B. What does it include? See, if you see that there is some salaries and wages of 20 lakh. So they are telling us regarding something about salaries and wages, that salaries and wages of 20 lakh include something, A and B. What does it include? It includes contributed 74,400 in national pension scheme. Okay. What this person has done is he has contributed to new pension scheme, national pension scheme, referred to in 80 CCD regarding, see, CCD we don't have to do anything, but the thing is that this pension scheme is referred in CCD. So employer also contributes from his side, and you understand employer contribution is the expense for the company. For the employer, it's an expense. For the person who is having a PGVP, so let's say I am an employer and some of my employees are there. So if there is a new pension scheme which I am following, so I will be contributing something towards the new pension scheme. So this is my expense, and you know that it is allowed also for me under section 36. Everybody is first of all okay with it. Can you relate what type of expense it is? So there are some of my employees, and I am contributing for new pension scheme. Everybody okay with it, that it is an allowable expense for me? Contribution to recognized provident fund, contribution to statutory provident fund, contribution to new pension scheme, etc. It's a expense for me, allowed under section 36, subject to 43B also, if it should be deposited in the respective fund up to the due date of ROI, employer contribution, right? Everybody's okay with this? Yes or no? Correct. And guys, in new pension scheme, see, employer contribution to RPF, other funds are okay, allowed, but new pension scheme has a limit also to it. Earlier, this limit was 10% of the salary of the employee, but now with amendment, it has increased to 14%, 1/4. So what I have contributed is 74,400, which is already debited, which is showing in my salary. So I should make sure that it should not be more than 14% of the salary. Salary includes basic salary plus DA forming part. So it should not more than 14% of the salary. Earlier it was 10, but now it is 14%. So contributed 74,400 in National Pension Scheme referred to in 80 CCD regarding salary paid to an employee. Mr. Ganesh, who has withdrawn basic salary of 3 lakh and DA 40% of the basic salary, 50% forming part. Okay. So they have given the salary income also to calculate that 14%. So they have given that salary you are giving to the employees is 3 lakh, DA is 40%, 50% of DA forms part. So it means that we are giving him basic salary 3 lakh. DA is 40%. So 40% is 1.2 lakh, but 50% forming part. And for this purpose, I need only the DA which forms part. If nothing is mentioned in the question that how much forms part, then we will not take that DA. But if it is specifically mentioned that how much forms part, so they are saying 50% forming part. So it means 1.2 lakh is the DA, 60,000 forms part, 0.6 lakh. So 3.6 lakh is the salary for this purpose. So 3.6 lakh into 14%. Correct, Aditya? 60,000 forms part. So 3,60,000 into 14%, 14%, it is 50,400. 50,400 should be the maximum limit of this. So if I have given up to this limit, 50,400 or less, then we are okay. But if we are giving anything which is more than 14%, then it is not out. Guys, it is related to new pension scheme. 14%. For RPF, etc., we don't take any other limit, right? Just subject to 43. That's it. So we have paid 74,400. So how much extra we have paid? 24,000 extra we have paid. So 24,000 will not be allowed. So I have debited 74,400, but 24,000 is the extra amount I have debited. It will not be allowed. Everybody is okay with it or not? Very good. Understood now? Please remember, guys, it's an important thing. It's an important thing. Raju sir, DA included now? So DA we are giving 40% of basic. 3 lakh plus 40%, 3 lakh 40% is 1.2 lakh, and 50% of DA forms part of retirement benefit. So DA I have included for whatever the forms part of retirement benefits. Clear? Raju sir? For calculating DA amount of 1.2 lakh, 3 lakh into 40%. I should take 1.2 lakh. Why? Because in section 36 it is mentioned. In section 36 it is mentioned that DA only up to the retirement benefits. In section 36 it is mentioned that the purpose for the salary is basic salary plus DA forming part. So that is the reason I have taken only DA forming part. Okay. So out of this, 24,000 should be added back. Now, some of the employees opted for retirement under voluntary retirement scheme. Okay. Some of the employees opted for retirement under voluntary retirement scheme a sum of 2,40,000 was paid to them on 1st January 2025. Santosh, for non-government employee, it is 10% of salary, right? No, we are not calculating 80 CCD. We are not calculating, guys, 80 CCD. Santosh, what you are telling me is 80 CCD. We are not calculating 80 CCD. 80 CCD is for the employee when you will be giving the deduction to him. Right now, we are not calculating 80 CCD. I am the employer. 80 CCD is concerned with employee. When employee will file his return, he will file, will be taking care of 80 CCD. Why I should take care of 80 CCD? Right? For employer contribution, section 36 specifically says 14%. That's it. Correct? 80 CCD, you are saying correctly. If that employee is a non-government employee and an employee is following optional regime, then 10%. But otherwise, you know that with amendment now, it has also become 14% if he is following default regime. Correct? So this is 80 CCD employee is concerned with. I am not concerned with it. Okay. Some of the employees opted for retirement under voluntary retirement scheme. So you understand voluntary retirement scheme, and 2,40,000 is paid in January 25. So this year we have paid 2,40,000 as VRS, and it is included in salaries. It is included in salaries. We have debited 2,40,000. Guys, what's wrong in this? Please tell me, you guys tell me what is wrong in this. Correct. Correct. Only 1/5 is allowed. Section 35D, preliminary expenses, 35 DDA, this one. Voluntary retirement expenses, only 1/5 is allowed. So whenever you see preliminary expenses, whenever you will see, forget about the section number. Whenever you will see preliminary expenses, whenever you will see voluntary retirement expenses, it is allowed in 5 equal installments. So you cannot debit entirely in 1 year. You have to debit only 1/5, 1/5, 1/5. So out of 240, because this person has debited entirely 240 and showing in salary. No, only 1/5 will be allowed. 4/5 will be disallowed. Everybody is okay with it now? Are you able to recall this provision? 4/5 will be disallowed. Now, interest on loan includes interest paid at 15%. So there was some interest on loan. This one. So they are talking about this interest on loan. Includes interest paid at 15% per annum on loan of 12 lakh. So 12 lakh interest on loan, 15%, which was taken from State Bank of India on 1st May 2024 for purchase of new electric car of 15 lakh. So we have purchased an electric car of 15 lakh, for which we have taken a loan of 12 lakh on 1st May 2024, 15%. The car is used for personal purpose. The car is used for personal purpose. It means that it's a personal expense. So please don't allow it. And it is included in interest on loan. First of all, tell me how much is the interest? First of all, please, everybody tell me how much is the interest, guys? 15% rate of interest. The value of the car is 15 lakh. We have taken a loan of 12 lakh on 1st May 2024. Everybody, please tell me what is the interest? $165,000. Everybody, very good. 12 lakh. See, 15 lakh is the car, but we have taken the loan of 12 lakh. 12 lakh into 15% for 1 month is 1/12 into 11 months. So you are telling me 1,65,000 is the interest. So it's a personal expense. It is not allowed. It's a personal expense. It is not allowed. So interest on loan out of this 165, it's a personal expense. We will not allow. Correct, Deepak. Now please tell me, this 165, can it be allowed anywhere in electric vehicle if we purchase? Electric vehicle we purchase. So there is a deduction somewhere. This person is following optional regime. So there is a deduction for electric vehicle if you purchase. Please write with me. Please write with me. Interest on loan on electric vehicle. Guys, it depends that whether this electric vehicle is for your business purpose or for personal purpose. If it is for business purpose, that interest always allow as business expense. Always allow at business expense. And we know that interest on loan is allowed under section 36. Although 36 number, if you don't remember, that's perfectly fine. But you should know that anything which is purchased for business purpose, that loan is allowed under section you can leave, but that is a business expense. That is perfectly a business expense. No issues. And now where you will claim other deduction, no. Whatever is the interest, there is no limit to it. There is no other condition. It's a business expense. Allow it. Can it be allowed in any other section now? No. Now, since you have entirely allowed it, cannot be allowed in any other section now. You cannot allow it in any other section. So can you claim a deduction also in section 80E B? No. In that case, you cannot take a deduction in that case. Correct? Because you have already claimed it as a business expense. And this section also says, the deduction section also says that you can, if you have already claimed a deduction under any other section, then you cannot come in this section. And it's perfect, logical also. You have purchased an electric vehicle. I'm not saying even electric vehicle. You have purchased any business asset. Any business asset, it is a business expense interest. No doubt over here. But if it is a personal, if it is personal, then interest on e-vehicle is allowed under section. See, 80E is for education loan. 80EE and 80EA is very, I would say small sections, not that important for housing loan for a person who is purchasing house for the first time. And 80EEB, under section 80EEB, no need to remember the section number, but you should know that there is some provision related to e-vehicle. Interest on e-vehicle is allowed under section 80EEB up to rupees 1.5 lakh is the maximum limit. Guys, there is no such limit in business vehicle. So it is allowed 1.5 lakh. So here the interest is which we are giving it is not for business. So I will not allow it as a business expense. So this person has allowed as a business expense, which is wrong. First of all, I'll say no, it is not allowed there. I will add it back. It's a personal expense. Yes, it's a personal expense. Now, can I allow out of 165? Can I allow 150 here? The answer is still no. Guys, these sections are not that important now. The answer is still no. You cannot allow because this section says if you have taken a loan up to 31st March 2023, if you have taken a loan up till 31st March 2023, then only it is allowed. Otherwise, it is not allowed. Everybody has done it or not? First of all, tell me. Understood now? Have you all understood? Good. Now the question is, can you allow for business vehicle? If we have taken the loan up to this date, can the business vehicle can also be there? Could be there, but it is not a good decision Because 80 EEB says that it can be personal, it can be business, but why you want to claim for the business expense here? For business expense, you claim in the PGBP. Now it says much better. There is no such condition of the taking the loan. There is no such condition of 1.5 lakh, whatever it is for business. So it is better to take here. So it is not written in 80 EEB that only personal could be allowed. Business could also be allowed, but it is not a worth decision. Always take it as a business expense. I believe everybody is okay with this. So here in this question, 1,65,000, it is a personal expense, it is not allowed. And even you will not get deduction in 80 EEB because the loan is taken somewhere after that date to 2023. Okay. Now, fourth, depreciation allowable as per income tax rules is 4,50,000. So first of all, this depreciation, which is 6,17,000, I will not allow. I will only allow 4,50,000 rupees. But during the calculation of such depreciation, following addition was considered. Motor car purchase for 3 lakh for supply of, so first of all, the depreciation should be, the correct depreciation should be 4,50,000. This is the correct depreciation. Motor car purchase for 3 lakh for supply of finished goods to dealers on 25th of August 2024. And we have not considered this motor car depreciation while calculating this figure. So actually my depreciation should be 450, correct depreciation, plus, because in 450 there is a motor car depreciation also. There is a motor car depreciation also which we have not considered. And please tell me it is used on 25th of August 2024. So you understand it is less than, it is more than 180 days. Why? Because you know that there is a date 4th October. If anything is used on 4th October or thereafter, 4th October, 5th October, 6th October, then less than 180 days. If it is used on 3rd October 2024, then you will get exactly 180. And before that, obviously, you will get more than 180. It's a full depreciation. So on 3 lakh, 15% is the rate of depreciation, full depreciation. So 45,000 is this depreciation. So your correct depreciation should be 495. It should not be whatever is debited, just disallow it and allow this one. All okay with it? No doubt over here. An asset was purchased for 6 lakh. An asset was purchased for 6 lakh on 17/11/2023. 17/11/2023. Not in this previous year. We have purchased some year back. So I believe this is previous year, 23/24. Our year is 24/25. So this is purchased last year. How much? 6 lakh. For conducting scientific research. Okay. So can I say the original cost of the asset is 6 lakh? We have purchased last year. So I'll make this also. That the original cost of this asset was 6 lakh. And because we have taken it for scientific research purpose, the value of this asset is nil. Why? 100% deduction was claimed. Correct? I have already explained you the first thing which I explained you today. Now, he has claimed deduction under section 35. Okay, so the value of the asset is 0 today. The asset was sold on 5th of September 2024 for a consideration of 8 lakh. We have sold it for 8 lakh. Okay. First of all, tell me it's a long term or a short term. 17th November 23 we have purchased, and 2024 we are selling it. So it's a short term asset. Agree? It's a short term asset. 5th of September 2024. Even it is not even a year. It's a short term asset. Correct? So there is no problem of indexation. And anyways, it is sold on 5 September 24 post budget. So always there would be no indexation in that case also. However, it is a short term. Now, how much you have sold it for? 8 lakh. So your selling price is 8 lakh. So what does it mean? Everybody tell me how much is the PGBP income and how much is capital gain. I've already explained you here. So you will say that this amount, up till this amount, the original cost is a PGBP income. and over and above it, it's a capital gain. 8 minus 6. So it's a capital gain. 2 lakh is the capital gain, and PGBP income is 6 lakh. I've already explained you here. Keep, I think that you have joined late. So I've already explained you here. Over and above your original cost, it's a capital gain, and up to your original cost, it's just PGBP. So in this case, now, in this case, 6 lakh is PGBP, 2 lakh is capital gain. Everybody is okay with it. If you want, you can make it somewhere if you want. This is the original cost. This is its value right now. Deep understood, na? So tell me, in your P&L account, you have shown it 2 lakh as your PGBP. Whether 2 lakh is correct or not? No. Your PGBP should be 6 lakh. So what you can do, either delete that 2 lakh and add 6 lakh to your PGBP, or 4 lakh more you can do it. It is mathematics that you can do it of your own. So because you have to take PGBP as 6 lakh, you have, somebody will say, sir, already 2 lakh we have taken, let us take 4 lakh more. Good enough. Go ahead and do this. No problem. Somebody will say, no, sir, that 2 lakh is not correct. Let us delete that. Okay. And let us take 6 lakh. Same thing. Mathematics, you can take that. And please, 2 lakh would be your capital gain also, short-term capital gain. Guys, is it your special income? Is this 2 lakh short-term capital gain is your special income or not? Tell me yes or no. Is it your special income? Joseph, what about depreciation? Do you claim depreciation on a scientific research asset? Do you claim depreciation, or you claim section 35? Okay, no issues. Now, what I was telling you, I've forgot. Okay, I was telling you that whether this 2 lakh rupees, it's a special income or not. See, in capital gain, we have special income like 111A. 111A is on equity shares, equity oriented unit. It is not a special income. It is not 111. Then it is other short term, correct? Then the special income is 112. 112 is other long term capital gain. It's not a long term capital gain. 112A, equity shares, long term. It is not equity shares. So it is not 111A. It is not 112. It is not 112A. It is my normal income. So please don't treat it as a special income. Okay. So here we have taken 2 lakh over here. So 6 lakh should be here. So either add 4 lakh rupees more, or just delete this 2 lakh and add 6 lakh. And in your capital gain, please take 2 lakh also. Short-term capital gain. Now, other information. A plot of industrial land. It's a land which was used by Shivansh for his business purpose for last 10 years. Okay, so it's a industrial land, it's factory land, compulsory acquired by central government on 7th of May 2024. The compensation of 12 lakh was received on 27/2/2025. First of all, please tell me regarding compulsory acquisition. Regarding compulsory acquisition, we know the day when this asset is compulsory acquired, that is a transfer date. So this is a transfer date. When the day when it is compulsory acquired, it is known as transfer. But generally, capital gain says that when the transfer happens, capital gain should be taxable. In the year of transfer, please charge capital gain. But it's a very, very special case of compulsory acquisition. In compulsory acquisition, we make it taxable only. We make it taxable only when the compensation is received. So the compensation is received on 27/2/2025. Is it a transfer date? No, it's not a transfer date. Just to give a relaxation to the assessee. So we say that whenever you receive the compensation, then we will make it taxable. That's it. Your transfer date is 7th May 2024 only. So here, Your transfer date is 7th May 24, and you receive this compensation. And luckily, you receive this compensation also in this year. See, 27 May, February 2025, it is also of this year. Previous year, 24-25. So now there is no problem. You can make it taxable right here. You can make it taxable right here. Although the transfer took place on this date. Now, tell me, such property was purchased on 8/8/2006. 2006 we have purchased it. Getting it transferred in 2024. Obviously long term. Okay. My question to you is pre-budget or post-budget? My question to you is pre-budget or post-budget? Because for long term, we need pre-budget, post-budget. Because for if it is pre, indexation would be there. If it is post, indexation will not be there. It is pre-budget or post-budget? Everybody tell me. Okay. Guys, what is pre-budget or what is post-budget? See, only for the purpose of giving relaxation, we are saying, only for the purpose of giving relaxation, we are saying we will tax you at a later date. But your transfer happened on this date, na? Your transfer happened on this date. So if your transfer has happened on this date, obviously it is pre-budget transfer. It's a pre-budget transfer. What is important for us? What was Nirmala Sitharaman was saying? She was saying that any transfer now which will be taking place on or after 23rd July, it would be not indexed, right? On or after 23rd July, it will not be indexed. So the transfer took place here. We are making it taxable in any year, doesn't matter. The transfer already took place here. So it's a pre-budget. And it's a pre-budget, long-term indexation would be there. So only for the purpose of making it taxable, you are making it there. Otherwise, it's a pre-budget. No issues. Understood? Indexation would be there. 100% indexation would be there. Right? So you have, it is taxable this year here, but indexation would be there. So how much you have received the indexation? Compensation 12 lakh. So full value of consideration would be 12 lakh minus cost of acquisition. I will index. It's a pre-budget. So it was of 2 lakh. So CI of the year of transfer this year. See, CI of the year of transfer, you always take the CI of the year of transfer. If in fact, if this money would have been received in after 1 year, 2 year, 3 year, in numerator, you always take CI of the year of transfer. So transfer took place on this date. Only for the purpose of taxability, we are making it taxable in any other year. The year of transfer is this only. That is the year of taxability. So mainly important is year of transfer. 363 divided by 2006 and 7. Okay, they have given 117 into 2 lakh. So 6 lakh 20,000. 513 you can take. So 5 lakh 79,487. This is my long-term capital gain is coming. Correct? Now, please make it somewhere. Make it somewhere. I'm not solving this question now because we have done almost everything. Yesterday I've given the homework. Some students told me that they are finding the problem. That is the reason I'm discussing it. So I think that you can do it now. First of all, write it over here. Capital gain here. Correct? Now, he has purchased another plot of industrial land on 21st April 2025 for 6 lakh. Now guys, we have an exemption under section which is not very common, 54D, not very important also, but in fact in your classes also I was telling you that there are exemptions 54 which is important. 54B, agricultural land, it's okay. Okay, quite important. 54EC, 54F, very important. And I've told you that 54D is the one exemption. We have total 5 exemption. Everybody remember, in all the batches, regular batches I have discussed in detail. In fast track also in detail. In even workout also I have explained this. So that we have made you in workout also that there are 5 exemptions. And this is one of the exemption. 54D, it is only available to manufacturing assessee if their factory land or building is compulsory acquired. So here his factory land or building is getting compulsory acquired. And if you purchase another factory land or building, then you can claim exemption under 54D. Time of purchase is 3 years. So it is 3 years. So either up to the due date of ROI, you purchase it, or you make a deemed investment in capital gain scheme. Correct? So here, this person has actually purchased another asset on 21st of April 25, much before the due date of ROI, 6 lakh rupees. So he will get 54D exemption. And 54D exemption is very, very easy. Same like 54, amount invested or capital gain, amount invested or your capital gain, whichever is lower. So amount invested is 6 lakh. Capital gain is this. So obviously 5, I'll get 54D over here. 54D, I'm writing it here. So you will get 6 lakh or 579, 487. So your capital gain will become 0, guys. Everybody, have you written this? Please write it quite neatly. I have just written it like this. So capital gain, long-term capital gain is 0 here. All okay with it? Let me know if you have written this. Okay. $54D is amount invested. Second is capital gain, whichever is lower. Okay. This is the capital gain. Compute the total income. Okay. Now we have received the total income. I think we can easily calculate. Guys, tell me whether when you will compute your total income as per optional regime, whether he has salary income? No. Whether he has house property income? No. PGBP, of course, he has. Capital gain, he has. In fact, he has short-term capital gain on sale of scientific research asset 2 lakh, and long-term it's 0. You have to calculate. IFOS income, he has this lottery income. And how much you will take in lottery? Please tell me. This is after TDS 30%. So it is 31,500 divided by 70%. So I believe that in IFOS, you will take 45,000. Correct. Correct. And then please, when you will be computing your tax liability, whatever the tax liability is, please deduct TDS also, because your 30% TDS has been deducted also on this. So I believe 13,500, 30% TDS has also been deducted on it. So whenever you compute your tax liability, minus TDS. I think you will be able to do this. Everybody, okay, let me discuss about opening and closing stock. What adjustment you will make, guys? Opening stock and closing stock are undervalued by 10%. So they have undervalued by 10%. It means that if their original value was 100, we have, how much we have recorded it? 90%. Everybody okay? How much we have recorded it? 90%. And opening stock, we have recorded it 450, closing stock 558 was shown. So it means in opening stock, we have recorded it 4,50,000. which is undervalued, and this is actually 90%. So tell me what is the correct amount. I believe 5 lakh everybody will able to receive. 450 divided by 90 into 100, 5 lakh. So it means that you should show for 50,000 more. You should show 50,000 more in your debit side. Show 50,000 more. So how it will be? Your profit will be reduced because you are increasing your debit side. You are increasing your expenses. So you will less. This opening stock undervalued 50,000. You will subtract. And same way, closing stock you are showing as 558. Closing stock you are showing it as 558. This is also 90%. 558 divided by 90%. 620 should be the correct amount. So 62,000 you should show here also. 10% more. And you are increasing your credit side. And if you're increasing your credit side, you all know you will add 62. Please don't make mistakes over here. Some people do it reverse the way. That is a mistake. Okay. So here 20,000 you will add back. Here 4/5 you will add back 4/5 or 250. Here 165 is not allowed anywhere. Depreciation we have discussed. Scientific research we have discussed. This we have discussed. So I believe you will be able to do it. Let us come to question number 3. Let us come to question number 3. Rohan, 82 years, old resident surgeon. So Rohan is an 82 years of age, super senior citizen, resident surgeon, doctor, having his nursing home in Mumbai, giving the following particulars for the year ended 31st March 2025. So he is giving his particulars. What he has given to me, receipts and payment account. He has given to me receipts and payment account. Okay, this is receipts, this is payment. What are we supposed to calculate? That is very important. We are supposed to calculate. You are required to. See, I have not read the question. I am straight away coming to this point that what are we supposed to calculate? Compute the total income and tax payable by him for assessment year 25-26. So we need to calculate his total income. We need to calculate his tax payable by him as per the regular provisions of Income Tax Act. Assume he has not opted for 115 BAC, again optional regime. Okay. Second point says, what will be his total income and tax payable if he opts for the provision of section 44 ADA? Guys, what is 44 ADA? What is 44 ADA? Correct, Raju sir. It's a scheme for professionals, presumptive scheme. Correct. Presumptive scheme for professional. Correct, Hari. It's a presumptive scheme for professional. Those who don't know or those who don't remember, please write it somewhere. It's a presumptive scheme where we take 50% of gross receipts. Where we take 50% of your gross receipts as your PGBP income. Your PGBP, presumptive PGBP becomes 50% of your gross receipts. Provided your total gross receipts. What is gross receipts? It's nothing but turnover. Your total turnover, that is gross receipts, if it is up to 50 lakh, If your gross assets is up to 50 lakh, then it is allowed. If it is more than 50 lakh, then it is not allowed. But yes, relaxation has been given to people who are going above 50 lakh, but up to 75 lakh, who are going up to, see, who is between, you can write it somewhere, whose turnover is from 0 till 50 lakh. There is no condition. They can come. No other condition. Whose turnover is from 0 to 50 lakh, they can come in presumptive, no condition. But if your turnover goes above 50 lakh, up till 75 lakh, now for these people, there is a condition. For these people, there is a condition. The condition is that your total gross receipts, out of which how much is received in cash, should not be more than your cash gross receipts, should not be more than 5%. So if you are maintaining transparent records means that your out of the gross receipts which you receive, the sale which you make, it is all through banking mode mostly, then it is allowed. Your cash transactions are just 5% of your total receipts, then you are eligible. And if somebody is over and above 75 lakh to any amount, they are not eligible for presumptive scheme. Please make it somewhere. So 44 AD is presumptive scheme, and let me know once done. Let me know once done. Got it now? Very good. So they are asking us what will be his total income and tax payable if he opts for the provision of section 44 ADA. Will it be more beneficial for him to opt for 44 ADA? So now we have to compute only the presumptive PGBP would be computed. Other income would be as normal. Only the presumptive PGBP. See, if you have given it a thought, it is only PGBP is a presumptive income, right? So will it be more beneficial for him to adopt 44 ADA? So what we have to do is we have to compute tax liability as per non-presumptive. We have to compute the tax liability as per presumptive. And which one is more beneficial to him, the tax, we will give him that particular limit. I believe you are okay with it, what we need to compute? Okay. Now guys, I'm again reading the question. It says, Rohan, 82 years, old resident surgeon, having his nursing home, gives you the following information. What they have given to us? Profit and loss account, income and expenditure accounts, or receipts and payment account? Receipts and payment account. So whenever you get your receipts and payment account, this is also quite a common question which we get in our examinations. Mostly 60%, 70% of the chances that you will get your P&L account or income and expenditure account. P&L account is one and the same thing. But there might be chances. You might get receipts and payment account also. You might get receipts and payment account also. So in that case, you have to compute the income of PGBP accordingly. Everybody please write with me. Whenever there is a questions of receipts and payment account, guys, receipts and payment account is nothing but it is like your cash book. It is nothing but like your cash book. When I say cash book, it doesn't mean this is the cash book which you do in accounting. So in cash book, you have done not 2-column cash book, 3-column cash book in class 11 or in your initial classes of accountancy, you must have done this. 2 column, 3 column. Do you all remember? 2 column cash book, 3 column cash book. In class 11, you must have done that. Yes or no? You don't remember it? Remember. Deepa is saying remember. Okay. Good. I believe everybody remember that. So when I say cash book, it is not just cash book. It is bank book also. When I say cash book, so it doesn't mean that it is cash book. It is a bank book also. Okay. Now, whenever you will get your receipts and payment account, it is a kind of cash book. The debit side is receipts. The credit side is payment. You can all make this with me. Columnar cash book. Raju sir still remember. Correct, Raju sir. So receipts and payment account. So what you will have here, all the money which is coming in, here all the money which is going out would be recorded. So tell me, let's say in this year, you have received some money which is related to PGBP. It is for your business and profession. Your business and profession receipts. Let's say 30 lakh. And you have received your other receipts also. Other receipts also, that is not your income. Or it might be other receipts can be other heads income. Or it could be some kind of loan, etc. It might be happen na, that you have received some loan, etc. Loan is not your income. Either it is an other head income or it's a loan, or it might be possible it is your exempt income also. It is 20 lakh. I'm again repeating. On your receipt side, you find business receipts also, your sales money, whatever you have made the sales to your customer, 30 lakh. Your other receipts also, other head income. You have received a loan. Loan is not an income, it's a liability. You have taken a loan and you have recorded it over here that the money come in my business. You have received exempt income also 20 lakh. Guys, if I ask you how much is my PGBP right now, how much you will tell? If I ask you that how much is my PGBP, how much amount you have, you will say. Out of 50 lakh, how much is your PGBP? 30 lakh only. Everybody agree na? 30 lakh only, 20 lakh you will not consider. So while computing your PGBP, you consider only, I mean to say that while computing your PGBP, you consider only your business receipts. You don't consider your other heads income. Other heads income will go in other heads, not in PGBP. Loan is not your income, right? Yes, on loan which interest which you will pay, that is an expense. So that will go in payment side. Exempt income is not your income, right? So you should not consider this. The same way, on the payment side, let's say you find out on the payment side, there is some business or profession related expenses. Let's say 12 lakh. Your business or professional related expense 12 lakh. Let's say there are some other expenses or other payments, other expenses or other payments which might relate to some other heads. Any payment you have made, any expense which you made, which are related to some any other head. Let's say you have paid municipal taxes of house, but that is for house property, right? So you have written that. Or you have repaid some liability. Might have happened now that you have repaid some liability. You have made the repayment of the loan. Or any expense which is related to your exempt source. Any expense which is related to your exempt. Let's say there is an agriculture income and you are doing agriculture expenses also. And let's say this all amount to rupees 7 lakh. And in this year, you have received 30 plus 20, 50. Out of this, you have made in business expenses 12, this 7, 19, and you are left with 31 lakh closing balance of cash. Correct? You're left with this amount. Tell me guys, if I ask you today, everybody please make it. If I ask you today that how much is your PGBP income, what you will tell to me? Very nice. So what you are more concerned with, this is simple a receipts and payment account, very easy. So what you should consider is in your debit side, in your receipt side, you should consider only the income which is your PGBP income. Other heads, you should take it in other heads. That's okay. But right now PGBP, so you should take only your PGBP income and you should take your PGBP expenses. That's it. So you are not concerned with other head expenses. You are not concerned with repayment of liability. You are not concerned with expenses which are related to exempt source. No. And are you concerned with this closing balance? No. Closing balance is not your income. And this closing balance will become the opening balance of the next year. You are not concerned with opening balance or closing balances. You are only concerned with your PGBP inflow. You are concerned with your PGBP outflow. And it will get your income. Everybody agree? Guys, while computing your PGBP, because it is a cash book, it's a bank book, it is only the transactions which are done in money form are recorded over here. But there are some non-cash transactions also like depreciation, like other deductions, which will not show over here. Correct? Then what you will do? So if there is any non-cash items also like depreciation or other deductions, so you should give them separately. Right? So if I say that there is a depreciation also of 2 lakh, so you all said 18 lakh, which is perfectly correct. 30 minus 12, 18. And minus 2 lakh depreciation also 16 lakh will become your PGBP income. Everybody okay? So again, repeating it, summarizing it, only you are concerned with your PGBP income inflow, you are concerned with your PGBP outflow and other non-cash expenses which are related to PGBP. That's it. Simple. This is receipts and payment account in total. I believe guys you have made it. Now, this is a receipts and payment account. This is a normal receipts and payment account. We just need to identify. So now please help me in identifying that whether it is your PGBP related or not. First is opening balance 125. Tell me everyone, is it my PGBP or not? Yes or no? Opening balance. Yes or no? Should I consider in PGBP or no? Opening balance. This is the opening cash balance of this year. Everybody tell me whether I should consider this in PGBP or no. Everybody. Very good. So this closing cash balance, opening cash balance, we should not consider. So I will not consider this in PGBP. Okay. Fees from visits to other hospital 585. 585. Fees from visits to other hospital 585. Should I consider this? Is it my PGBP income or not? So he's a professional, he's a doctor. He's visiting other hospitals and other hospital is paying him fees. Very good. This is my PGBP. This is my professional income. Okay. Here it is written net. I will come back again on this particular word net. Okay. Fees for the month of March 24 received in April 24. Okay. Let me come to this point after 2 minutes. Dividend from shares. First of all, tell me dividend on shares. It is written net or gross. I don't require it right now. But first of all, tell me, is it your PGBP or is it your IFOS? So we all know it is my IFOS income. Correct. Fees received during the year 10,25,000. Fees received during the year. PGBP or not? Yes. It's my PGBP. Gift received from relatives of patients. Gifts received from relatives of patient. PGBP or not? PGBP or not? Everybody, I'm waiting. Everyone, I'm waiting. Sorry, I'm waiting. Okay. Joseph, when you receive gift from your employer, whenever you receive gift from your employer, Joseph, what is your income? In which head is your income? You receive gifts from employer. Salary. Very nice. Salary income. Okay. So we understand gifts are not every time IFOS. It could be salary also if we receive from employer. Tell me, when you receive gifts from your customers or clients, what is that income? You receive gifts from your customer or clients because you are a professional. You receive customer from your customers or clients. Joseph, very good. PGBP. For doctors, who are the clients? Patients or their family member is the client, right? Family member is the client, na? So these are the client. These are the people who give you professional fees. So this is the gifts received from the relatives of patient. So there is a patient. Let's say, for example, the patient is a child. His father is giving you a gift, and this person is a doctor who is receiving it. What it is? It is PGBP. So it is a PGBP. Honorarium for painting services in Jai Hind Art School, 22,500 net. Forget about net or gross. So this is an honorarium that you went over there as a professional or any other thing. You might be painter also. So you went over there. They have given you some honorarium, etc. So this is a IFOS income. This is an IFOS income. Okay. Income tax refund. Forget about this interest. First of all, tell me income tax refund. What type of income it is? Income tax refund. Income tax is not our expense. Income tax refund is also not our income. Under which head? Nowhere. Income tax refund is not an income. Income tax refund is never an income. Income tax is not our expense. It's not an allowable expense. Whenever you see in your debit side income tax expense, you will not allow it. Whenever you get the refund also, you don't make it your income. Under any head, IFOS, no. Income tax refund is never your income. But the extra amount which you receive on refund, that is called interest. That is your IFOS income. So 12,100 is not your income, first of all. Not PGBP, not even IFOS. But including interest of 1,500. So IFOS is actually 1,500. This is my IFOS. This is my IFOS. Everybody okay with this? So we identified that there is some professional, there is some professional, there is some professional services. Okay. He keeps his books of accounts on cash basis. He keeps his books of accounts on cash basis. What does it mean? Generally, we always assume that if the question is silent, the assessee is maintaining his books of accounts on accrual basis, mercantile basis, right? But if specifically given in the question that assessee maintains their books of accounts on cash basis, it means in that case, whatever is received during the year, previous year 24-25 is our year. So whatever is received during the year is your income. Whether that particular receipt belongs to this year or any other year does not matter. Whether it belongs to this year or any other year does not matter. Whatever the money which you received here, it is your income. Whatever is the money which you pay, that is your expense. It might relate to any other year. It might relate to this year, doesn't matter. Whatever the expense which you paid during this period, April 24 till March 25. It is your expense. Everybody knows it. Now tell me if it is given specifically that the assessee is maintaining on cash basis. So whatever he received might relate to another year also, doesn't matter. It is this year income. Fees for March 24. Guys, to which year it relates? March 24, previous year, 23-24. Last year it relates. Received in April 24. Received in this year, our year. Tell me, will you make it your income or not? Will you make it your income or not in this question? Yes. Why yes? Because it is followed on cash basis. Had it been an accrual basis, I would not have made it. I would not have made it if it would have been on mercantile basis. But now it is on accrual basis, I'll make it. So 85,000 is my PGVP. 85,000 is your PGVP. So this is a doctor. This person is a doctor. So he has received 85,000. They have given the split also. That split I don't require. 40,000 IPD, 45,000 OPD. IPD is a medical term. OPD is a medical term which you use it. This is called inpatients. This is called OPDs, outpatients. Guys, what is inpatient, outpatients? What is OPD? So let's say when you go to visit a doctor, you go to the clinic, you take the prescription, you take the consultancy, you take the medicines, and you come out. So in that case, we were not admitted into the hospital. We just went there, took the consultation, came back. This is how we do most of the time. This is called OPD, outpatients. We were not admitted into the hospital. Sometimes it happens that there is a person who went to the doctor admitted him into the hospital urgently. 2, 3, 4, 5 days he spent in the hospital. Now he coming back from hospital to his home. It is called inpatients, IPD. We don't require it right now. 85,000 is your income. Understood? So we have 1, 2, 3, 4 PGVPs over here, receipts. Okay. Don't write it. Please tell me. This person is a doctor. He has a clinic. He has a clinic. And generally on his clinic, he sits in the morning from 9 a.m. Let's say till 1 p.m. He sits in his clinic from 9 a.m. to 1 p.m. His fees is, let's say, 300 rupees, consultation fees, 300 rupees. Guys, let's say I'm suffering from cold or fever. I went over there. Or you are suffering from cold and fever. You went over there. Will pay 300 rupees to him. And when we went over there, there were some 10, 15 patients were also there. So everybody will pay 300 rupees to him. Will we be deducting any TDS or we will directly be giving him 300 rupees? Will we be deducting any TDS or we will be giving 300 rupees to him? 300 rupees to him. This is how you do it, right? This is how you do it. So let's say in a day, when he's sitting from 9 a.m. to 1 p.m., he is actually giving consultation to 30 odd patients. 300 into 30. 9,000 he will receive in a day. And let's say, for example, he works for 300 days. 9,000 into 300. 27 lakh. 27 lakh he will receive. What he will say that during this year, my fees is 27 lakh. He will say during this year, my fees is 27 lakh. Was TDS deducted on it or not? No. 27 lakh is the gross amount. Even it's a without TDS. So we have not deducted any TDS. It's 27 lakh rupees he will receive. It says PGVP. Correct. Let's say 9 a.m. to 1 p.m. he sits in his clinic. Then from 5 p.m. to 9 p.m. during the evening hours, from 5 p.m. to 9 p.m., he visits certain hospital of the city. It is not his hospital, but there are some other big hospitals. So this is hospital number 1, hospital number 2, hospital number 3. he visits 3 hospitals also. And this hospital is paying him, let's say this hospital number 1 is paying him 1 lakh rupees per month, not as salary, just as a professional services. For professional services, he pays 1 lakh rupees per month. Guys, what do you think that this hospital will deduct his TDS also or not for his professional services? Tell me, if you don't remember the section number, tell me at least the rate of TDS. Whether this hospital is giving him 1 lakh rupees per month, so whether they will be deducting TDS, the answer is yes, 10% under 194J. Correct, 194J TDS on professional services. So let's say this hospital is giving him 1 lakh rupees into 12 lakh, but they will deduct during the year 1.2 lakh rupees. And this person receives, this doctor received this amount, 10 lakh 80,000. This is net amount. Why? Because TDS under section 194J is deducted. Guys, tell me, when you will be computing his PGBP income, how much you will take? 10.8 or something else? 10.8 or something else? How much you will take his PGBP income? Net amount or gross amount? Gross amount. 10.8 or 12 lakh? 12 lakh. Right? So please, while computing his PGBP, make 12 lakh. And whenever your tax liability would be there, when you will be computing tax payable, deduct this TDS. Everybody understood this or not? And guys, why you are so silent today? Correct? Correct. So please take his PGBP as 12 lakh. And while deducting, while computing his tax liability, once tax liability would be there, deduct 1.2 lakh he have already paid as TDS. So whatever is the remaining amount, this doctor will pay that. Okay. So please tell me, in this question, fees from visit to other hospital, net amount is written over here, 585. Please tell me how much you will take in PGBP, 585 or something else? Question will not give you 10%. Question will not give you 10% because it is in your course that you should know that there is 194J. 10% is the TDS. You will take it as gross level. What is that amount? Darshini, what is that amount? $650. So 6,50,000 should be your PGBP, and 65,000 is the TDS on this. 65,000 is the TDS on this. Similarly, fees from patients, this is not, there would be no TDS because whenever we go in the morning, we don't deduct TDS. Fees received during the year, this much we have received, we will not deduct TDS. Gifts received from relatives of patients, no TDS over here also. They will give you just gifts, no TDS over here also. So here there would be a TDS. And wherever you are seeing net amount, that is the TDS. Okay. Now, so we have looked at our receipt side. So what we are doing we are identifying our business receipts. The same way, I will identify my business payments. Guys, salary to staff, what do you think? It's a PGBP expense or not? Remember this thing which I have told you. Remember this thing which we have told you. If it's a PGBP expense, then yes. If it is other expense, then no. Salary to staff, PGBP expense, yes, it's a PGBP expense. I will subtract it. Taxes and insurance. So if nothing is mentioned, we'll assume it as PGBP. So if something is mentioned in information, then I'll see. Otherwise, rates and taxes, I believe it's for business, then we are okay with it. Entertainment expenses, 1,10,000. What do you think about entertainment expenses? Allowed or not allowed? Is it a business expense or not? You will tell, I'll not tell. Everyone. You might be right, you might be wrong, doesn't matter. Just answer. Entertainment account expenses, festival expenses, other expenses are if they are of business nature. If we have done it for our staff members, correct, Hari? Yes, Raju sir. Because in business we do some entertainment expenses, staff welfare expenses. So it's a pure BGBP expense. So if something is mentioned in the question specifically that it is for personal nature, then we will not allow it. Otherwise, we are perfectly okay with it. Because for staff welfare, we conduct entertainment expenses also. We just incur expenses also. So this is my PGBP expense. Guys, what about purchase of television? Correct, Raju sir. For clients, for customers, etc. What about purchase of television? It's a capital expenditure. First of all, we have to see it's a capital expenditure. So it is not a revenue expenses. We will not allow it. Sorry. If now, sorry, in case if it is for a business television, then we will allow depreciation on it. What is the rate of depreciation on television? Plant and machinery 15%. But if it is for personal nature, then we will not allow it. But yes, it is a capital expenditure, so should not be allowed it. If it is for personal, nothing should be done. If it is for business, depreciation should be done. Gift to daughter-in-law 60,000. What do you think? Business or personal? Obviously personal. It's a personal expense. It should not be allowed. Interest on loan for repairs of property. Interest on loan for repairs of property. So now it depends, what is this property about? If we have let out this property or it is self-occupied for our residential purpose, it could be a house property expense. If this property we are using for our business, then it is a PGBP expense. So it depends upon what type of property it is. So I believe that in the information they will tell us that what type of property it is. If it is house property, let out or self-occupied, then we will take in house property. Otherwise, you will take it in PGBP. Personal medical expenses. Obviously, these are personal expenses. They are specifically telling us we will not consider. We will not consider this. Then deposit in PPF 55,000. What do you think? Everybody tell me what it is. Deposit in PPF. Is it a business expense or not? First of all, just tell me, is it a business expense or not? Do you deposit in your PPF? PPF is, you all know, it's a kind of investment which you make and you get ATC deduction also. My question to you is it a business expense or not? Deposit in PPF, is it a business expense or not? Very good. It is not a business expense. It is a personal investment. It's an investment rather. And since we are following optional regime, so we will get ATC exemption also. We'll see ATC exemption also, not here. Yes, deposit in PPF will get the ATC exemption. Nursing home expenses, it's a PGBP expense. That is okay. Professional fees paid for consulting services 120. What do you think about it? Professional fees paid for consulting services 120. What do you think about it? It should be PGBP or not? Professional fees paid for consulting services, it should be PGBP or not? Correct, it should be PGBP. Why? Because this person is a professional and he can take consulting from other professionals also. Normal. It's a PGBP expense. Purchase of furniture at home, straight away no. First of all, it's a capital expenditure. It is not a revenue expenses. Secondly, if it is for business, I would have claimed depreciation. But here it is specifically given it is a personal for home. So we will not even claim depreciation on it. Personal expenses, obviously no. Balance cross forward. This is the closing balance. I will not say anything over here. Okay. Now, he keeps his books of accounts on cash basis and has not opted for the provision of 44 ADA. So first we have to compute as per normal, then we will be computing by presumptive income. That's okay. Salary includes 60,000 paid to his sister who is qualified nurse. First of all, tell me, I'm not reading anything extra. Can you pay this money? Salary includes 60,000 to pay to the sister of the assessee and she is a nurse. Can you please pay this amount to her or not? Can you pay to the relative or not? We can pay to the relative. If it is at fair market value, we can pay it. And if nothing is mentioned, we'll assume it's a fair market value. So there is no problem in it. This information is not relevant. But the problem here is that it is paid in cash. So if it is paid in cash, I will not allow this. I will not allow this. Why? Because it is more than 10,000 rupees. Entertainment expenses includes 25,000 rupees. So this entertainment expense, this one, this includes 25,000 rupees also. For what? For dinners to doctors in a 5-star hotel. Allowed or not? Regarding this 25,000, it's a dinner to doctors in a 5-star hotel. Allowed or not? Yes or no? Yes or no? Yes. Why not? He is a doctor. So for his business or profession, for his profession, he needs another doctor services also. So they are like his clients, customers, advisors, right? So we can, to keep them happy, to increase the business or professional connections, we can do this also, na? As per the peer meeting, correct? As per the peer meeting. So these are perfectly fine. I am perfectly fine with it. It is related to our professional network. We would increasing our professional network. This is for our professional thing. So if we are giving dinner to doctors, it is a kind of staff welfare. They are not exactly staff, but yes, it is a kind of that. It is a kind of business promotion expenses. These are kind of advertisement expenses, business promotion expenses. These are perfectly okay with it. So we don't have to do anything. We have to write a note because examiner has given it. So we will not disallow it, we will allow it, but we will give it a note also that it is a normal business staff promotion or welfare expenses. So we don't have to do anything of C, just a note. It is just a disclosure is required. That's it. Interest on loan for repair of property includes 40,000 for his residential property. For his own residential property, he has paid 40,000 rupees. So tell me interest on loan. There was some interest on loan here. This one. Guys, interest on loan for repair of property. And this 65,000, they are saying out of this, 40,000 is house property. And remaining 25,000, they have not said anything. So it means that they are for business. So tell me how much you will take for PGP? 25 only. 40,000 is for house property where we are living. So we will take only which is 25,000, not 40. I believe everybody is okay with it. Now guys, a very important point over here. So they said that 40,000 for his own residential property. They are indirectly telling us that there is a house property which is self-occupied. They are indirectly telling us that there is a house property which is self-occupied, very, very hidden adjustment. So we have house property also, and house property which is self-occupied, we take the NAV as nil. Standard deduction 24A, nil. 30% of nil would be nil. 24B, interest on loan is allowed. If it is for, see, if it is had been a default regime, I would have not taken the interest, but he's following option regime, so interest is also allowed. And you understand, for purchase and construction, it is 2 lakh rupees is the limit for self-occupied property. And for repairs, renovation, reconstruction, 30,000 is the limit. So they are indirectly telling us it's a self-occupied property and interest will allow 30,000. There would be a house property loss of 30,000 rupees. Have you understood this or not? Have you understood this or not? Very important, a very hidden adjustment over there. So indirectly, they are telling us that there is a house property which is self-occupied and we are paying interest. So we know that for self-occupied, interest is also allowed. How does it matter, Raju sir? We don't need loan. We don't need in house property. Do you are more concerned with loan or you are more concerned with interest? You're more concerned with interest. Obviously, if there is an interest, obviously there would be a loan, right? So in 24B, in house property, we don't require the loan amount. We require the interest amount. See, if I would have given the loan amount to you, you would have calculated interest. They have still directly giving me the interest. So why I need loan, sir? Got it, sir? And they have said that this for repair purpose. Correct, sir. Loan is a must. Loan is a must. But see, if there would have been no loan, how can there be interest? So loan is a must. Huh? So we are not paying interest without a loan. Obviously, loan would have been there. That is the reason we are paying interest, right? If there would be no loan, I would not have paid any interest. E point. His daughter-in-law earned income of 10,000 from the amount received as gift. So his daughter-in-law earned 10,000 rupees from the amount received as gift. Okay. Guys, what do you know about this? What do you know about this? His daughter-in-law earned income of 10,000. E point. His daughter-in-law earned interest income of 10,000 from the gifts which we have given to her. Should we do anything over here or we should not do anything? His daughter-in-law earned income of 10,000 rupees from the amount received as gift. Should we do anything of it or we have to ignore this? Waiting for your answer. Very, very good. Very, very good. So we understand that any asset transferred to spouse or son's wife, any asset transferred to spouse or son's wife, and if there is any income which is coming, that income will be clubbed. So there is a clubbing of income provision over here. So there is a clubbing of income provision over here. Everybody is okay with it. So 10,000 would be clubbed over here. And if nothing is mentioned, she has earned some interest income or any other thing, I will make it IFOS income. I would be clubbed in the head of IFOS. Everybody is okay with it. So he has given this to his daughter-in-law. Daughter-in-law means son's wife. So this income would be clubbed. All okay with it? 10,000 will become his IFOS income. Fixed assets value as on 1/4/2024 are as under. So why they have given the fixed assets value? Obviously, this is a non-cash item, depreciation. We would not have shown it in receipts and payment account, but we will consider this. So nursing home equipments 220. Nursing home equipment says 15% rate of depreciation plant machinery. Medical books including annual publication of 10,000, 35,000 is the medical total books, including 10,000 as annual publication doesn't matter. On all types of books we have 40%, 35,000, 40%. Laptop again 40%. So on 220 we will charge 15% depreciation rate, and on this 35 and 40 we'll charge 40% depreciation rate. Television purchase for nursing home on 21/9/24. Television purchase for nursing home. Guys, that television purchase, we will claim depreciation also now, because why it is purchased for the nursing home? It means for the profession. Is put to use on 3rd of October 2024. Guys, full depreciation or half depreciation? Depreciation would be there now, full or half? On the television. Television value was 48,000. Tell me. Television was purchased in this year, put to use also in this year on 3rd of October. So if you will count from 3rd October onwards, you will get exactly 180 days. You will get exactly 180 days. So you will claim full depreciation of 15%. Got it? 4th October, you will get 179. Half. 3rd October, you can calculate also. 3rd October, you will get exactly 170. See? If it is on 3rd October, so how many days in October? First and second day we have not used. 22 days, I'll subtract 29 days. 30, November, December, January, February, March. Exactly 180 days. So when you have exactly 180 days, it is full depreciation. 179 or less, half depreciation. Please remember 3rd October, exactly 180 days. 4th October, half. He donated 10,000 towards PM Cares Fund on 15/8/2024. What you will do over here? He donated to PM Cares Fund 80G. Optional regime, in default regime we will not get, but here we will get 80G, 100% deduction. Now we have to compute the income and tax payable. And again, the income and tax payable as per presumptive in second point. First of all, normally. Everybody please with me. Good question, good question. Most of the things were there. And I believe most of you are clear with all the things which are mentioned in the question. All of you, as of now, you are clear with all the things which are mentioned in the question till now. Very good. Now quickly, let us do the presentation. Very good. Solution number 3. First, I am doing the first one. Normally. First, computation. Guys, my screen anytime got blurred or it is clear to everyone till now? It's clear. Very good. Thank you, Aditya. Computation of total income and tax payable of doctor, whatever is his name, assessment year 25/26, and they have asked us that we are following optional regime. We are following optional regime. Same thing I tell you that please see your elimination thing. Eliminate the heads which we don't have. Salary, house property, PGBP, capital gain, IFOS. Salary, I think we don't have. Do we have salary anywhere? No. House property, indirectly, yes. Indirectly, yes. PGBP, of course. Capital gain. Do we have a capital gain? Have we sold any capital asset over here? I didn't find any. Correct? IFOS, yes, we have. So house property we have, PGBP we have, IFOS we have. We have not sold any capital asset, neither transferred. Salary income we don't have. Correct. So let us start with the house property. It is assumed it's a self-occupied property. So the NAV of this property is nil less standard deduction nil, interest on loan 30,000. Because we understand 40,000 is the interest on loan, but limited to 30. 30,000 is the house property loss. 30,000 is the house property loss. My question to you is whether this house property loss can be set off from other heads income or not. Whether this house property loss can be set off from other heads income or not. Tell me your answer. You can be right, you can be wrong, doesn't matter right now. Whether this house property loss can be set off from other heads income or not. We understand, correct Kishore, Aditya, correct, Deepak, correct. Yes. See, if we would have been following default regime, then no, it cannot be set. See, in default or optional, house property 1 can be set off from house property 2. Same head, we don't have any problem in either of the regime. There is no limit also. But whenever you set it off from other heads, if you are following default, then perfectly no, it cannot be set off, not even a single rupee. But if it is optional, it can be set off maximum 2 lakh. Maximum 2 lakh. So here it is 30,000, so we don't have any issue. Here we can set it off because we are following optional regime. So in this case, it can be set off. House property we got. Then we have PGBP. PGBP will make a working note. So I believe that we have to do something in PGBP. We'll make a working note. And the last one is to have IFOS income. See, whenever you don't have to waste your time in examination. So if you are finding your income, IFOS income, so you should not look at your payment side. You should not look at your receipt side. You should look at your receipt side. Just find where is your IFOS income, receipt side. Don't look at the payment side. Opening balance, no. Fees is professional. This is professional. This is IFOS income, dividend. So dividend is an IFOS income. So dividend is an IFOS income. 18,900. Guys, what do you think? What is written over here? Net. So what does it word net means? Now tell me how much dividend you will take in IFOS. 8,900 or something else? And what is that something else? Very good. So you all know that on dividend, the rate of TDS is 10%. The rate of dividend is 10%. So this is actually 90% amount. So 18,900 divided by 90 into 100, you will get 21,000. So 21,000 is your actually your dividend income. So it means that 2,100, 10% is actually the TDS. Why I'm also calculating TDS side by side? Because I need to compute my tax payable. So when I'll get my tax liability, I will reduce 2,100 from there, right? So I will take IFRS income. My dividend income is 18,900 divided by 90 into 100, 21,000. Second, fees received, gifts received, no. Gifts received is from patient, so it's not IFRS, it's PGBP. Honorarium for painting services in Jai Hind School, 22,500. This is again my IFRS. So he went to some school, they have paid him honorarium. He's a professional. So as a professional, we have paid him honorarium, 22,500. And here also it is written net. So we will assume that 10% TDS is there under section 194J. As a professional, we have paid it. So this is again the same thing we have to do. 10% TDS was there. So it will be 25,000 and 2,500 would be the TDS over here. The TDS would be 2,500, but the gross amount is 25,000. Correct, Aditya? So it would be honorarium 22,500 divided by 90 into 100, 25,000. See, in the receipt side, we have seen most of the thing. Income tax refund is not an income, but interest on income tax refund 1,500, it's an income. Correct. Now, guys, I will not waste my time in the payment thing because we are more concerned with IFRS income. So it would be in receipt side. Are we done with it? Just look at your any information. If some income is sitting over here, first one, no salary, this included. It is not IFRS and it makes not interest on loan is not. E point. His daughter-in-law earned income of 10,000. That is your IFRS income, right? Then fixed assets, no. Television purchase, no. Donated, no. So this is the only IFRS income, 10,000 rupees we have. So this is income, which is clubbed income, 10,000. $57,500. Correct, Deepa, Darshni. 57,500 is our IFRS income. Then we will have GTI. So let us first compute our PGBP. So right now I'm concerned with my PGBP. Everybody has done till here? Very good. Guys, can you take 10 minutes and compute PGBP for me? Okay, you don't have this now. Can you take 10 minutes and compute PGBP? So this is yesterday's file only. If you have the yesterday's file downloaded, it is there in the yesterday file itself, this question. Should I make it more zoom? Should I make it more zoom or is it clear? It's okay. Okay. Let me know once I have to change and show you the next slide. If you don't have it with you, the file, although you should have be having it. This is the same file, last yesterday's file. It is there in this question. Take 10 minutes of yours. It is 9:24, 9:35 till 9:35. Try to give me PGBP. Guys, I want you that by tomorrow and day after tomorrow, you should solve a total income question in 20-25 minutes by yourself. See, when I'll explaining it, I'll be taking more time. But when you should solve it, you should solve it in 25 minutes max. If you want to change the screen, if you anybody would like to change the screen, please tell me, I'll change. Just make a working note of PGBP and don't look at the solution. Don't look at the solution. How you will compute your PGBP? Simple. All your PGBP receipts minus all your PGBP expenses. How much you calculated? Seven lakh 88,800. I think it should be correct. Deepa, Rashni, I think it should be correct. Seven lakh 88,800. Eighteen lakh 5,000 is your receipts. 10 lakh 16,200 is your expenses. Aditya also got the same answer, 7,88,800. Shagna also received it. I believe it is correct. Very nice. Very good. So it should be like everybody else. So you will take as your receipts should be just your business receipts. Take, don't write any other thing, just your business receipts. So it should be 650, 6,50,000 business receipts, 85,000 also. Then fees received during the year, 10,25,000. Gifts received from relatives, 45,000. That's it. So it is 6,50,000 plus 85,000 plus 10,25,000 plus 45,000. 18,05,000 is your business receipts. Everybody, I believe, okay with it. Then the expenses, staff to salary, 350, yes. Taxes and insurance, 26,000. Nothing is mentioned for taxes and insurance. Now we understand it's PGBP. Entertainment expenses, 1,10,000. 25,000 they have said to us. So we'll just give a note over there, not more than one line, not more than half line, of course. So dinner for doctor is a business expense. That's it. So 350 is our expense. 26 is our expense. 1,10,000 is our expense. Purchase of television, we will not claim it, we will claim depreciation on it. Gift to daughter-in-law is not an expense. Interest on loan for repair of property. So 40,000 is for house property, but 25,000 is for business. So we are only concerned with our business expenses, right? So 25,000 is my interest, which is related to business. Personal medical expenses, I will not write it over here. Deposit in PPF is not an expense. Nursing home expenses, 375, yes. 375 nursing home expenses is there. Professional fees for consulting, 120 is this should be there. Furniture at home, no. Personal expenses, no. So professional fees for consulting, 120. $120 is there. These are the expenses which are there in my debit, in my payment side. Now I have some other expenses also. Salary includes 60,000 rupees. So I should not include that 60,000. So here actually I have debited 350 So if we have taken this as an expense, so I will add back that 60,000, or what I can do, I will subtract 60,000 from here because that is not allowed. Everybody agree? So this should not be 350, it should be 290. Then entertainment expenses, we don't have any problem. Interest on loan we have taken. Daughter-in-law we have not taken as an expense. That's okay. Fixed assets, depreciation will charge. So depreciation we will charge on 220, 15%, and on laptops 35,000, 40,000, and also on television. Television also will charge. So 220. So depreciation is where I should write. Let me write it over here. Depreciation. So on equipments, 2,20,000, and on TV also it is full depreciation 15%. TV is of 70,000. So on this 15%, so the depreciation would be 2,20,000 plus 70,000 into 15%. 43,500 is the depreciation on 15%. 220, it was 220, na? Yes. And on laptops and books, 35,000 and 40,000. That makes 75. So depreciation on laptops and books, 40% of 75,000. 30,000 this depreciation. The total depreciation is this 73,500. 73,500 is the depreciation. That also will claim. What else? We have donated to PM Cares Fund. That is not a business expense. No. So I believe these are the expenses. Everybody is okay. So this is 290. 2,90,000 plus 26,000 plus 1,10,000 plus 25 plus 375 plus 120 plus 73,500, 10,29,500. Have I missed something? Then 19,200. 3,300. I have taken something extra. TV is 48,000. Oh, TV was 48,000. Oh, I have taken 70,000 from somewhere else. Oh, I have taken medical expenses. TV was 48,000. Correct. TV was 48,000. TV was 48,000. This will become 40,200. So this is actually 70,200. Correct. Thank you so much, guys. Correct. So this is the total expenses are, you have given me 10,16,200. Everybody got it? 1805 business receipts. 10,16,200 is my PGVP expense. So my profit is coming as this minus this. Everybody has done it. It would be, you told me 7, how much you told me? 7,88,800. Correct. Very good. So let us keep the 78 lakh, 7,88,800 as my PGBP. Or everybody done, I believe. 7,88,800. So now my GTI will come as 816,300. Correct, Raju sir, Kishore, Darshni. Correct, Aditya. 8,16,300. Now, since this person is following optional regime, now chapter 6 se deduction. So when you get chapter 6 se deduction, actually when you have paid something over to anyone or you have invested something. So let us look at our payment side. Is when we are seeing our deduction, so we should look at our payment side. So whether we have paid anything where we get deduction, salary, no, taxes, no, entertainment expense, no, purchase of television, no, gift to daughter, no, interest, no, personal medical expenses. Now it's a very important point over here. Personal medical expenses. See, generally in 80D, it's an important adjustment. In 80D, we get the deduction for the health insurance. For health insurance, we get the deduction. But we know that if the assessee is a senior citizen, and here he's super senior citizen. So I've told you that in that case, if he does not have a life insurance, then also his medical expenses are equivalent to health insurance premium. So in this case, since he's a very old person, he's 82 years of age. So in this case, we'll assume that he does not have a health insurance. We'll assume that he does not have a health insurance. So we will give him 80D deduction for his medical expenses also. Everybody got it? Quite a hidden adjustment. Everybody? So 80D, please give him 50,000. See, for normal people, for the people who are not senior citizen or super senior citizen, it is for 25. But for senior citizen, super senior, it is 50,000. Give them 80D. Section 80D. 70,000, but maximum 50. So 50,000 will give them the deduction. We'll assume, we'll write over here, we'll assume assessee does not have health insurance. Assessee does not have health insurance. Now, deposit in PPF. This is ATC. So, nursing home expenses, professional fees, purchase of furniture, personal, no. Deposit in PPF is ATC. So we have to write ATC. Because it's not necessary that you should write ATC first, then it really no. You can write any of them first. So ATC is PPF. 55,000. We'll see if something is else there in ATC or not. Okay. A point, no deduction, salary, entertainment expenses, interest on loan, daughter, fixed assets, television, no. Then donation, 80G we will get. So we don't have any other ATC. So 55,000 will get in ATC. And 80G, donation to PM Cares. Donation to PM Cares is actually a category 1. You understand, we have done 4 categories: 100%, 50%, 100% with limit, 50% with limit. So it is PM Cares Fund. 100% we will get. So he is donating 10,000 rupees. So these are the deductions. Is it 701,300? Correct. Okay. Correct, Dashni, Raju sir, Ragna. This is the total income. And now we have to compute the tax liability also. Guys, optional scheme. He is a super senior citizen. 0 to 5 lakh nil. Understood? 0 to 5 lakh nil. He's 80 years or more. Second thing, does it has any special income? Does it has any 111A, 112A, 112? No. It doesn't have any capital gain. Does it have any casual income? No. So simply tax liability at slab rates. First 5 lakh, no. Next 5 to 10 lakh, 20% exact. So 701,300 minus 5 lakh, 20%. 40,000, 40,260. Let me add cess also right here. Whether this person is eligible for rebate. Guys, his income is 7 lakh 1,300. Whether this person is eligible for rebate. Very important point over here. Whether this person is eligible for rebate. See, in optional regime, it is up till 5 lakh total income. If it is little bit over and above 5 lakh, then no rebate. Guys, I am asking that for optional regime, no, because we take 5 lakh. For default regime, is he eligible for rebate? If let's say this person is following default regime, had it been eligible for rebate or not? See, in default regime, correct, Raju sir, in default regime, if it is up till 7 lakh, we give rebate. But in default regime, there is also a concept of marginal, right? So if your income is little going above 7 lakh, 7 lakh 1,000, 7 lakh 2,000, around 7 lakh 28, 29,000, then there is a concept of marginal relief also in default regime. But here it is, he is following default. So he is not following default. So there is no rebate over here. 4% cess. So after cess, we are getting 41,870 rupees. Now, less. This is his tax liability. Please write this is his tax liability. And now from his tax liability, we will less TDS. Whatever the TDS has been there, we will take that credit. So TDS was fees from visit to hospital 65,000. Dividend it is 2,100. Honorarium it is 2,500. So there were 3 TDS. Agree? 65,000, 2,100 plus 2,500. 69,600. Correct, Darshni. 69,600. So I'll add all these TDS. 65,000 plus 2,100 plus 2,500. No need to show the sections number where it is. No need to, not required in examination. So it is 69,600 is the TDS. And he will get a refund. This is tax refundable. $27,730. This is the tax refundable. Correct, Darshni. Aditya, correct. Everyone is okay with it? Now, guys, it's quite a big question. Now you know it. So once you will try it one more time, you will not take more than 25 to 30 minutes. Second time, if you will try more, then you will be able to do it within 20 minutes. Although we have, while explaining, I have took 1 hour in it, but I'm telling you, you will not take that much time now. Now, guys, they were asking one more thing. They were asking one more thing, that if he would have chosen the presumptive income, then what would have been his income? First of all, let us see that whether he is eligible for 44AD or not. Before applying 44AD, whether he is eligible. So he would be eligible if his gross assets is up to 50 lakh. If it is also between 50 to 75, he could be eligible if his cash transactions are not more than 5%. So in this case, what is his gross receipts? If you will see his gross receipts, it is 18 lakh 5,000. Agree na? His gross receipts were 18 lakh 5,000. So this person is eligible. This person is eligible because his gross assets is 18 lakh 5,000. Everybody is okay with it. 18 lakh 5,000 gross assets. You calculated it now. 18 lakh 5,000. So it is not more than 0 to 50 lakh. You are okay. 50 to 75 with a condition. More than 75 not okay. So he is eligible. So what changes it will make to my answer? See, only my PGBB income will change. Only my PGBB income will change. So in that case, my house property will remain same. My PGBB will change and this will remain same. Everything, there also is following optional regime. Everything will remain same. Only there would be a change in PGBB. And how much it would be, I'm not doing it. You can easily do it. So it was, my gross receipts were, how much I told you? 18,05,000. 18,05,000. Everybody got it from where I'm getting this 18,05? Into 50%. 9,25,000 would be his PGBP. Sorry, 9,05,000. Okay. Correct. 9,02,500. This would be his PGBP. Right. Everything else will remain same. Only his PGBP will change. So we will calculate this also. We'll show this also. But I don't think it's a good option. Guys, why do you think that it's a good option for going for presumptive income in this case? Why do you think that's not a good option? Although we'll calculate, everything will remain same, only my PGB will change, but I don't think it's a good option. Why? PGBP is increasing, right? Correct, Raju sir. PGBP is increasing. I don't think that you will be able, your tax liability will, I believe it will be increased or your refund will be decreased. So it will not be a good option. So I believe everybody can do it. Will you able to do it? There would be no change. Tax refund would be less. Correct, Shagna. So tax refund would be less. So that is not a good option. So I think that you can easily do it. So I don't have to do it for you. Anyways, you have the solution. Okay. So let us come to, I will be discussing, that is question number 4. I'll be giving you in homework, but let us discuss for 5-6 minutes regarding question number 4 also. And then we'll wrap up for the day. Okay. This is question number 4. Guys, this would be your for homework. Question number 4 would be for your homework, but please wait. Let me give it 5-10 minutes. Then we'll wrap up for the day. Nisha is a resident individual, age 54 years, is carrying on the business of manufacturing of textile fabrics as a proprietor. Guys, she is also a manufacturer, right? She is also a manufacturer as a proprietor. The turnover for this is this. So before I read this, let me see what the question is demanding from me. The question is saying me, you are required to compute the total income. Here again, I have to calculate my total income. And guys, we are doing the total income sums only. So most of the time we will be getting the total income. So you are required to compute the total income and the tax payable. When they say tax payable, it means tax liability minus TDS, TCS, advance tax, right? Tax payable. So just don't stop at tax liability. If there is any TDS, TCS or advance tax, please deduct that also so that you can get your net tax payable or refundable as the case may be. So you're required to compute the total income and tax payable by Nisha for the assessment year this and ignore the provision of 115 BAC. So again, they are saying optional regime. And why optional regime? See, default is a little bit easier than optional. So that is the reason I consider for optional. If there would have been any difference, I would be telling you that what would be the difference in it. In PGBP, you all understand there are three differences: additional depreciation, or we have differences like outside scientific research, section 35. Outside scientific research, we get in optional, but we don't get in default. Then 35 AD specified business. Optional is there, but not in default. Okay. So now we understood that we need to compute the total income of Nisha first, then the tax liability, and then the tax payable. Okay. So it says she's carrying a manufacturing business. Guys, when your assessee is following optional regime, and he's a manufacturer, and he or she is a manufacturer, in that case, you should also, if there is a new plant and machinery, and there's an indication that it is used in factory, and generally plant and machinery is there, you should consider, very good Shagna, you should consider additional depreciation also. In default regime, we don't get, but in optional, we should get additional depreciation also when your assessee is following optional and it's a manufacturing concern. Okay. The turnover of the previous year, 23-24, was 250 lakh. So our turnover is 250 lakh of the last year. Guys, what do you think that why it is given to us? Because last year turnover was 250 lakh. Why do you think that it is given to us? For the TDS provisions, correct. So here we know that this person is a big individual. So there would be if there is any TDS, then this person is eligible to deduct TDS. And if he has not deducted, 30% will disallow. And in the current year, the previous year turnover was 600 lakhs. So I don't think that I would require anything regarding current year. Still, they have given the current year turnover. That's okay. But my previous year turnover is more important. If my previous year turnover is more than 100 lakh, 1 crore, more than 1 crore, not exactly one. If it is more than 1 crore, then this assessee is eligible to deduct TDS. The net profit as a profit and loss account is 5,61,000. So this is my starting point. Net profit as per P&L account is 561. So this should be my starting point. She provides the following additional information. Those were not considered while making the P&L account for the previous year 24-25. So there is some information which this information she has not taken into consideration while building her P&L account. So while preparing the P&L account, some information she missed. So we have to incorporate that information, that particular transactions also. Understood? So they are saying she provides the following additional information. Those were not considered. Those were not considered while making her P&L account. Okay. So we'll see what is the information and if she has not considered it, whether it is impacting our PGBP or not. Okay. First is depreciation has not been debited to P&L account. So there is depreciation which we have not debited to the P&L account. So I think we should consider this. The details of the plant and machinery employed in the business are given as under. So they have given the information on the plant and machinery. It's plant and machinery. We understand if nothing is mentioned, the rate is 15% on plant and machinery. If nothing is mentioned on building, the rate is 10%. Building 10%, plant machinery general rate is 15%, 1.5. Opening written down value of the machine used for manufacturing purpose 475. This was the opening value 475. Correct? This was the opening value 4,75,000. On 3/7, this is the opening date, right? 1st April 24. On 3rd of July 24, new machinery was purchased during the year. Payment was made by an account pay check. It's good that she has made the payment by account pay check, because if any payment which you pay more than 10,000, that will not be considered. but good account paycheck. And see, they are giving a clear indication new machinery was purchased. So they have not given it that it is installed in factory, but it is understood that a person who is a manufacturer and who is purchasing a machine, so they are giving you a clear indication new machine. So it will be assumed that additional depreciation would be there. Everybody agree? First we will give the normal on 7,25,000. Then we will give 20% more. Why guys? 10% or 20%? So this is the date of purchase. Put to use, if it is not given, then we will assume that same date purchase and same date put to use. July 24, full depreciation. Then additional also. Sold one of the old machine. In this year, she sold one of the old machine of 75,000. What we will do? We will reduce it from the block. And then at the end, we will see how much is the value of the block. So it would be 4,75,000 plus 7,25,000 minus 75,000. So this will be the closing value of the block. Let us see if we have more information on it or not. She does not have any other fixed assets in this business. So this is the only asset which she has. This is the only block which she has. Okay, this depreciation will charge. B point. Received a subsidy of 20% on the new machine purchase on 3rd of July 24. Okay. So this machine on 3rd July 24, which we have purchased it for 725, we have received a 20% subsidy. What you will do? We have received a 20% subsidy. What you will do? Waiting for your answer. What you will do of this subsidy? The subsidy would be 7,25,000 into 20%. 1,45,000. What you will do of this 1,25,000? Please tell me. What you will do with this 1,45,000? Everybody, if you know, tell me. If you don't know, also tell me. So don't know. Simple. If you know, please tell me. If you don't know, please tell me. If you want to give the wrong answer, please give the wrong answer. No issues. Very good. So whenever we receive a subsidy on any asset, our asset value will be reduced. Why? Our assets value can be reduced. So in this case, Raju sir, it is only one method. Even the accounting standard says only one method. So if you receive a subsidy on a machine, so it will not be considered as your income. See, subsidy related to revenue thing can be your income, but subsidy related to capital assets should be reduced from the value of the cost. And even the accounting standards also say this. So if it is clearly identifiable for which machine it is, so it will be reduced from the cost. So this 7,25,000 into 20%, 145 is a subsidy which you have received. So actually now your actual cost of the asset for the purpose of depreciation would not be 725, it will be 80% now. So please reduce that 145,000 from here. So your actually asset will now be of 5,80,000. It would not be for 125, correct? So received a subsidy of 20% on the new machine during the previous year under technology upgradation fund scheme from the central government. From wherever I have received the subsidy does not matter. From wherever I have received the subsidy does not matter. So my here, now tell me how much is the total depreciation which will charge. Opening value 475. Additions during the year 580, not 725, 580. Minus money received on sale 75,000 negative. So it would be 4,75,000 plus 5,80,000 minus 75,000, 9,80,000. So 9,80,000 you will charge depreciation. So first of all, normal depreciation. into 70 into 15%. 1,45,000, 147 is the normal depreciation, very good. So the normal depreciation would be 1,47,000 and additional depreciation on this 580. Whether on 725, no, 725 is nothing now. 580 is your main. On 580, additional depreciation 1,16,000. This is the total depreciation. If you want to write it somewhere, please write it, or you have the solution also. But this is for your homework. I am giving this question. So I'm discussing some of the important points over here. 1,16,000 would be the additional depreciation. 116 plus 147 is the total depreciation. Please allow it. So this is the net profit. You will start with this net profit as per P&L account 561 less depreciation, because this assessee has not considered it. Let us consider this depreciation also. Second point done. She paid job charges for the value addition on the fabrics 90,000 without deduction of TDS to job worker by an account paycheck. What you will do over here? Her turnover was more than 1 crore last year. She was supposed to deduct TDS, and what she has not considered? She has not considered of deducting TDS. See, 90,000 she has paid, that's okay. What she has not considered? She has not considered TDS. So 30% of this 90,000, 27,000 should be added back. Everybody agree? So she paid job charges. Job charges she has paid, that's okay. But without TDS, so what she has not considered? She has not considered TDS. So please add back 27,000. Everybody is okay with this? Everyone okay with this? Please add back 27,000. 90,000 into 30%. Commission paid to one agent. She has paid the commission. Commission paid to agent, that's okay. As deduction in the earlier assessment year, 50,000. She has paid a commission in earlier assessment year. In past. Last year, last to last year, anywhere. She has paid this commission. Has now been received back during this year from the agent due to settlement of his commission agent. 50,000 we have paid earlier. Now we have received it back. What do you think what it is? Guys, what do you think what it is? We have recovered the commission back. We have allowed the deduction in last year's. Now we have recovered this back. What do you think what it is? It is a kind of recovery of the expenses which you have claimed earlier. So it is deemed PGBP income. It is a deemed PGBP income. Please add 50,000 as your PGBP. She has not considered, make it your income. Which income? PGBP income. Right? It is like recovery of bad debts. It's like recovery of expenses which you have claimed earlier. Please make it your income. I believe all okay with this. 25,000 paid to creditor for goods in cash. Obviously not allowed. Please add back 25,000 also. Paid in cash. Incurred a loss of 1,17,000. Incurred a loss of 1,17,000. It's a loss. Let us see how the assessee has recovered this loss, has incurred this loss. Incurred loss of 117 from an eligible transaction carried out in respect of trading in derivatives in recognized stock exchange. She has done a trading. Guys, when you do intraday trading, it is your speculative business income. No, it's not a capital loss, it's a trading. Derivative trading is never a investment. It is not capital gain or capital loss. Trading is actually PGBP. And if you do intraday trading, same day you purchase the share, same day you sell it, that is called speculative PGBP. Speculative PGBP loss cannot be set off from other income. Speculative PGBP loss cannot be set off from other PGBP. It can be set off only from speculative. Everybody knows this or not? First of all, tell me. Speculative PGBP can be set off only from speculative. Vice versa is correct. Normal business loss can be set off from speculative, but speculative loss cannot be set off from normal, only speculative. Yes or no? Yes or no? Correct? Okay. Now, when you do intraday trading, that is speculative. But they have specifically mentioned that if it is a trading of derivatives, derivatives is future and option. So I am not explaining it entirely. I'm not explaining it entirely. I am just right now, just remember this. When you do intraday trading, that is speculative. But when you do derivative trading, future and option, they have told that it is a normal PGBP. It's a normal PGBP. It is not speculative PGBP. So it's a normal PGBP loss. It's a normal PGBP loss, not speculative. So it's a normal PGBP loss of the current year. It can be set off from any head. It's not being brought forward from some year. It is this year PGBP. It can be set off from any head except salary. First of all, we'll try to set it off from PGBP, same head. If same head is not possible, other heads also. See, is it for any earlier years? Had it been coming from any earlier years, I would have set it off from only from PGBP. It is not carried forward loss. So it's a current year loss. Do you remember in set of chapter, in set of class, I have discussed this. It's a current year loss. Current year loss can be set off from other heads also. So if this PGBP can be set off from any head other than salary, first we'll compute it from PGBP, set up from PGBP, if not from others also. Have you understood this or not? Had it been not derivative, I will not set it off from other income. I will set it off from only speculative. But this is not derivative trading, is not speculative. The nature of derivative trading is this only. It is a normal. Okay. It's a normal business loss. Please set it off. G point. Interest received amounting rupees 2 lakh duly authorized by the partnership deed of Ramji Textile 15% on the capital employed. She is a sleeping partner in Ramji Textile. She has received interest amounting to rupees 2 lakh and she has not considered this. She has not considered this 2 lakh rupees duly authorized by a partnership deed at 15% per annum on the capital employed. She is a sleeping partner in Ramji employee. She is a non-working partner. Guys, I have told you, to everyone I have told you, even for the workout back students I have told you, that if you receive, whether you are a sleeping partner, whether you are a working partner, doesn't matter, with regard to interest on capital. Interest on capital is your income. Interest on capital is always your income. Do you remember, I believe in the PGBP chapter somewhere, see, this is what I have told you. Remuneration to partners. If you are receiving interest on your capital, interest on their capital, so it becomes PGBP income of the partners for all. Whatever is the actual interest received, that is your income, but maximum 12%. Maximum 12%, whichever is lower. It means maximum 12% is your income. And I have given you this example also. If you receive interest on capital, please make it your income. And maximum 12% you should make. So if there is 26,000 you have already taken in your P&L account and it is 13%, so I have told you that only 12% could be your income. Remaining is not your income. So only you should take your PGBP, only 12%. So this is 13%. How much is 12%? 24,000. Understood? And it is for all partners, whether you are a working partner or you are a non-working partner. Now the same thing is there. Interest received amounting rupees 2 lakh. She has not recorded it. Duly authorized by a partnership deed, 15% on capital employed. She's a sleeping partner in Ramji Textile. So what she should do is she should record it, but should she record this as 2 lakh or only up till 12%? Only up till 12%. So what it should be, 2 lakh is equal to 15%. Divided by 15 into 12, 1,60,000. So she should record 1,60,000 as her PGBP income. Correct? So she has not recorded it. Please record it, but only up till 12%. If it is more than 12%, see it was 15% and it was 2 lakh rupees. 2 lakh is equal to 15%. How much is equal to 12%? 160. Please record this. She received 60,000 by premature withdrawal from deposit, including interest of 5,000 in post office time deposit, eligible for deduction under 80C. I'm again repeating. She received 60,000 by premature withdrawal, including interest of 5,000 in post office deposit, eligible for deduction under 80C. Please remember, guys, it is a premature withdrawal. She received 60,000 including interest. Okay. So total is 60,000. So 55,000 is premature withdrawal and 5,000 is the interest. Total she received 60,000. Now, in 80C, it is mentioned that if you deposit in 5 years FD, if you deposit in 5 years post office scheme for a lock-in period of 5 years, we will give you 80C deduction. But if you break this FD or if you break this post office deposit before 5 years, before the lock-in period, what we should do? Tell me what we should do. We have given you 80C in the last years and with a promise that please keep it for 5 years. You have now not fulfilling your promise. It will become your income. It will become your income now, right? If it is before, if you are getting it after 5 years, then no issue. But within 5 years, if you are getting it, it will become your income. Please make it your IFOS income, right? Please make it IFOS income. How much? 55,000. See, 55,000 is the premature. This is the withdrawal. And please make it income. And yes, 5,000 is the extra interest. So total, it is 60,000. It will become your income. Everybody is clear on this? So in post office, FD, etc., 5 years is the lock-in period. If you withdraw before it, it is called premature withdrawal. It will become your income because you have claimed deduction earlier. So 55,000 will become your income. 5,000 is the interest on it. Obviously, it will also become your IFRS. So on and all, 60,000 will become your IFRS. Now, everybody got it? Then I think you will be able to do it. The remaining, I think remaining you will be able to do it. In case you face any issue, let me know. Just look at the solution. I believe that by reading the solution you will get it because the remaining one are quite easy. Remaining are quite easy. Correct. So this is your homework for the day. These are the important things which I would like to discuss. So please do your question number 4. In case you have time, you would like to practice something, then please, we have done question number 1 yesterday. Please do question number 1 also. In case you have time, please do question number 1 as well. It will actually give you more confidence. But anyways, question number 4, so everybody has to do it. So let us keep it right till here and then we'll continue tomorrow. Bye, take care. See you at 7:30 in the morning tomorrow. Bye. All of you, take care. You all are welcome.